Good morning and welcome back to Almus Market Mornings. President Trump's tariffs on Mexico and Canada kicked in, and the markets didn't take it quietly. The dollar index plunged nearly 1%, the euro surged over 1.3% to trade above 1.06, and bonds were all over the place. The 2 year US yield swung 15 basis points. Markets are now rethinking rate cuts too. JK, volatility is spiking. What's your read on the dollar? More weakness ahead?
Good morning, Swaraj. Yes, I think it's volatility galore every day. In fact, and yesterday has been perhaps the peak of the volatility that we have seen. Just to get a sense of the scale of yesterday's moves, in the US, all the major indices last 2% in the initial hours, reacting to Trump's tariffs taking into effect, and also Mexico and Canada, China retaliating as well. Then Nasdaq, which had fallen 10% from September 18 highs, rallied nearly 700 points or over 3.5% intraday. After this improvement came after the indications from President Zelensky of Ukraine possibly moving for a peaceful settlement in negotiation with the US, and that was a big boost to the sentiment as well. As you said, there's been big moves in the 2 year and the 10 year yields. That they have fallen quite a bit between 80 and 60 points. Sorry, 60 and 50 points in the last 1 month. Since then, of course, there has been a steady fall. Yesterday, it culminated with 2 year falling to 3.84%. High of 4.50 had been seen. 10 year fell to 4.10. High of 4.80 had been seen. And from those lows, they have recovered up from between 10 and 15 basis points intraday. Then the single currency euro, which is the most bearish view of the market for a long time, rallied 2.35% from previous day's low, that is 1.038 to 1.0628, and one of the largest moves that I have seen in the single currency in recent times. And this happened even as the German political parties agreed on a debt break, paving way for huge spending on defense and infra. And their huge spending on defense and infra is expected to give a big boost to the defense capability in Europe, as well as to the sagging German economy. And that's really reflected in the German bond yields, which have risen massively and narrowed the yield differential between the US and Germany. And this is definitely paving way for euro to rally. Dollar index fell 1.5%. It is a crucial support at 105.50. Oh, as far as the peace talks are concerned, Trump has told his advisors that he wants to announce a minerals agreement during his address to the Congress. Incidentally, we have the Trump's address to the joint session of the U.S. Congress right now, and we will, of course, update you if there are any major announcements made by him. But one of the announcements expected to be made is towards Ukraine peace deal, where now the President Zelensky is also, coming to negotiation as per the US terms, and that may be a big event and can be a big sentiment booster as well. Of course, market is also not reacted much to the tariffs going into effect, because somewhere in the Commerce Secretary of US also said that this is more the tariffs more are more due to the border issues, particularly the drug issues, which if the countries show serious attempts to address these issues, there can be a lot more relaxation in the tariffs as well. And everyone knows that the tariff issue is not going to just affect the exporting countries, but US itself will be hugely impacted with the higher inflation and which will also lead to lower consumption, which is already taking a beating recently, and the higher finance cost for the government itself, which is running 36 trillion of debt. So it's only a matter of time these trade wars get cooled off somewhat. Just to give you perspective, yesterday's announcement by China of 15% retaliatory tariff on US exports saw the yuan actually strengthen from 7.29 to 7.27. So I think these are the superficial announcements that we are seeing, but behind the scenes, I am sure the authorities are working towards a more amicable settlement, so that the economies don't suffer. And as we have seen historically, the trade wars don't help any of the countries, of course. Of course, now the markets are also focusing on the US economy. We will have the data on employment starting today, ADP private payrolls report, jobless claims tomorrow. Crucially, we will also have the ISM services report, which which is closely looked forward to, because the services report from the S&P Global had shown a contraction territory. And finally, we have the non-farm payroll report on Friday, which I believe will be quite weak, looking at the way layoffs have happened in the US. And also, the private sector has also been saying that they are resorting to retrenchment in view of the slowdown in consumption and demand that they are expecting. So, all in all, I think US data will stay weak for some more time. And this is perhaps being discounted in the market expectation of rate cuts. And CME's Fed Watch tool actually shows three rate cuts possible this year, and that's a big turn from just one rate cut that was expected just a month before. And so that's also keeping the US dollar on the weaker side. So dollar, in my view, is expected to weaken a bit more, maybe towards 105, 104. On the euro, is possibly going to test 1.0750, but we are getting indications that larger players in the market are now looking at bigger gains for the euro if the momentum of reforms in the Europe picks up. For the rupee, of course, we have traded in a very narrow range, observing all the global events, but the big fall in the dollar index, led by the euro, has slightly rubbed off on the rupee, which is we've seen a marginal strength of about 0.3%, having traded 87.45. Now it's down around 87.20 levels. But larger gains for the rupee will not happen unless we see a shift in the sentiment of local equities to the positive side, and more importantly, turn in the FI flows, which still continues to be negative till yesterday, and recorded nearly 25 billion of outflows in this year alone. So I think that's a very key point for the rupee to perform in line with other currencies. Otherwise, it should be stuck in the range of 86 half, 87 half for some more time. Thank you.
Thank you, Jackie. And a lot of data today, especially from the labor market. But more importantly, as you mentioned, there's a President Trump will be addressing the US Joint Congress, and markets would be looking forward to that. It will be out, I think, any time now, or it will start any time now. And more importantly, on the other side, we had the tariffs come into effect since yesterday, and that also led to quite a good bout of volatility. China has already announced a 15% retaliatory tariff on US agri products. We have the data from the US economy. One more important thing to remember, more recently, data from the US economy has been on the negative front, and it has impacted the rate cut expectations, which now stand at three rate cuts for this year, as against one rate cut at the start of the year. And for rupee, we trade in a narrow range amid the global chaos. The fall in dollar index has resulted in some marginal strength, but the tides really need to turn with the local equities, where we are testing new cycle lows. And at the same time, FII outflows have been quite steep. So till the time that FII outflows turn into inflows, rupee strength might be marginal. That's it from us, Rohit. Thanks for listening. Tune in tomorrow for the latest in the financial markets.